In this video, I will analyze the best strategies for binary options trading that you can use in your trading sessions even today. And I will explain them in detail using simple examples so it will be clear to absolutely everyone. So watch the video to the end and write your questions in the comments. And let's go! To begin with, we have to understand what market phases there are in general, and the first phase of the market we have the upward movement, which is characterized by the fact that we have the highs are rising and the lows are rising also. At the same time, we have this upward movement, which is characterized by the trend line, and you see the upward movement is a trend here. There's also a downward movement. It's characterized by the following way: the lows are falling and the highs are also falling, and the trend line looks like this. It shows a trend when the market goes from one stage to another. We can also have a sideways movement or a flat. So whatever you want to call it. You can call it a range, flat, a sideways movement. So the point is that we need to understand how we should enter the trade, exactly how we want to enter the trade on the trend, for example. You see here we enter the long, that is the upward movement, and we enter call option and catch the profit. Either we should change the direction of the movement from downward to upward, or on the contrary, take for example reversal points. So here we had a downward movement. We go into the long position and fix the profit. But we must understand what type of technical analysis we will use. For this purpose, in this video, we'll consider deals on the trend. So guys, let's move on to the first strategy, and the first strategy we have will be to use such concepts as order blocks, zones, prices in which major traders carry out transactions with a huge number of assets, and after which the price can get a powerful impulse in the opposite direction. For example, here we have a block order as an example, and for me the price has got this impulse, and it is such a trading zone, sideways movement, where the price stands still is a block order. In the case of an upward movement, order blocks act as a support zone. For example, we went beyond this line, came back down, we went beyond the order block, and the order block became a support zone. And we went further, higher, but at the same time, if we look further, this order block, in the case of a downward movement, will act as a resistance zone. So we'll not be able to break through this level. And we will use the second term where we have imbalances, the predominance of sellers or buyers in the trade. The difference is supply and demand volumes. Like here we have a lot of buyers and no sellers. The price goes up and there is a cascade of green candles. This is an imbalance. So guys, let's go to our next strategy right now. The first strategy will be based on the order block, the imbalance and Fibonacci numbers. And you see here we have Fibonacci grid. We should build here the levels 0.382, 0.618, 0.5 and 1.0. And for example, now I'm going to tell you how we can work with the Fibonacci grid. For example, we have an imbalance and there is a sharp jump in price, and we pull Fibonacci grid on this imbalance. So we get this imbalance and it will be our next strategy. So guys, let's participate. The strategy is that we will go with the green button. In the case of an upward movement, we will go long from the level of 0.5 or above the level of 0.5 and put a stop just below the level of 0.618. So we'll find a profit in this zone, you see at the edges, and see how this deal works out. So let's expand in this way. And we can see that the trade has worked perfectly in this strategy. Guys, on my YouTube channel, I'll give you trading base for those who are just learning trading, but I want to give you more benefits. That's why I remind you that in my Telegram channel, my team and I conduct trading streams, where in real time you can trade using our professionally verified signals. You need to click on the link in the description and get into the trading board, which will give you instructions on further actions. It's free and really gives great results, so I advise you to try it. So let's go back to theory. So now we move into the second strategy. We will take the following graph as an example. The second strategy will be to use the 200-day moving average indicator. So guys, we can take 200 days, which show us the general direction of the trend. So as long as these indicators are directed upwards, we have an upward movement. So when this indicator is directed downwards, is here we have a downward movement. So the strategy will be to take the reaction zones from this level, so from the level of the 200-day moving average, because it is a strong level. And here we can observe, as an example of this situation, we see that the price went up. So the price had almost changed the direction to a downward movement, but at the same time, it came out again up and formed the next imbalance behind itself. So while we have this imbalance, and it turns out we have a moving average, and from the moving average we will go into the loan. And we can also see that here we have an order block, such a zone above the trading, and we will put the stop behind the middle line of this order block, the nearest one, and take profit at the level of the previous one. So guys, for example, here we have the high, and we will put take profit at the level of the high, which is still there at the moment. And here we will have such a workout, so we should go into to test the level of the moving average, and we can also use the blocks as confirmation and use the imbalance, which will be also a magnet for the price. And you see, we understand that we should cover this imbalance. And here we have a 200-day moving average. But basically, we should be guided by the fact that we have a 200-day moving average here, from which we will take direction. For example, here is the same thing. We have a breakdown. There is an upward movement. We go with just above the average line of the average moving line. Put a stop behind the order block, and take at the level of the high. That is here. So everybody, we got a terrific deal, guys. Congratulations. And here we come to the third kind of strategy. The third kind of strategy we have is that we need to realize that imbalance zone is a magnet for the price, and we have to understand that the imbalance should be overlapped and go in, for example, in case of this imbalance, not too long but too short. And you see, for example, in this highest half of the chart, if we have some additional grounds for going with short, we should go with short until the imbalance is overlapped, because the imbalance is a magnet for the price. And now I'm going to find an example that suits us. For example, here we have this imbalance, but at the same time we see that here before there was an order block. And as I've mentioned you before, the imbalance zone is the zone of the interest of the price. So we must overlap it and to see the picture in this way. Oh, sorry guys, I'll be right back. So, when we see the picture in this way, we understand that here we have another block, and we enter the long position from this block. So we put a stop behind the middle line of this order block and take on that intersection of data enter a long position. We put a take on the level where we have formed this imbalance. And guys, to pull this imbalance and understand that the price will try to cover this imbalance. And we see that the workout of this deal. And here please look, the price has overlapped the imbalance because the price needs to return to this level of values. So the price must overlap this imbalance of this because of this, and we'll use imbalance as price magnet. So for example, here we compare with the first strategy, which we would go into short position here. For example, here we have this imbalance. We would go into short position, but put here 0.5 as the entry point 0.5, stop loss for 0.382, and this is what strategy looks like. So what you can see is that it worked amazingly well, and this is actually the difference. And my friends, here we will go with this way. But in this situation, we see that we have changed from upward to downward movement. And we see that we have an imbalance here. We also have an imbalance in case of a downward movement, and we have to cover it. And we enter here in order to cover this imbalance. It means to go up. So guys, not after we have covered the imbalance to enter the deal, but to use the imbalance is something that we have to come here, and that's the difference. So let's see. The fourth kind of strategy is to use the 200-day downtrend as a direction, as a resistance zone and support zone. And you see you have, for example, in the case of an uptrend, like here, the moving average is a support zone. In the case of a downtrend, like here, it's a resistance zone. So well, the downtrend is a resistance zone, and when, for example, after basically, as we can notice here, the first touch, the second touch, and after the second touch, the third touch basically breaks through this level. So guys, it's sure to go in, we can basically take reactions from the first level, but here we have a slightly different strategy. In this very situation, when we have the 200-day line breaks through from one side and consolidates. So, for example, here we see what happens, here's such a breakthrough, and here we have consolidated, and you see we had here, let me count, 1, 2, 3, 4, 5, 9 candlesticks, and because of this we can safely open a long position. And my dear friend, we see that here we have an exit, we return to this level. It means that we have gone beyond the level of the moving average. Here, turning from this level of the moving average, we go with long. So here we have a block order. We put a stop weight, and the profit we put on the nearest upward movement in the beginning high or the nearest high. So well, in this way, or if it is more risky or there are no such situations, we're looking for some zones of interest. And guys, we have a zone of interest. It's, for example, the imbalance, the overlap of this imbalance, or the first take or this take. So well, that's it. And here we have 4 kinds of strategy. The first strategy is to go in after we have overlapped our balance. We go into a position. The second strategy is we take direction from the moving average level as here. The first strategy is that we use the imbalance. We use imbalance as what we have the price came to this level. And guys, you see we look at the level of the 200-day moving average. We look at what trend we have and realize that we have a downtrend and the imbalance is on top. We realize that we can go long to cover this imbalance. So the imbalance will act as a price magnet. And the last strategy is like here, this retest of this level. So we broke through here, went down and shorted here. And here should always take with a reserve. So well, here for example, if we put a B here, it would not be taken, and generally the deal would look like this. We have a block order here because there is such a pro trading here, and the entry point is here, and we put a stop block order behind the middle line, take take over the nearest law, and we get to effect such a deal. All of them. Well guys, I sincerely hope that this video has become useful for you, and I think we can stop there. So please subscribe to my channel and leave comments below. Don't forget to put my other social networks